Welcome back, folks. You're looking at a daily chart of gold. So this is a high time frame analysis on the gold market. And we ask ourselves the same two questions that I always ask myself when I'm looking at a high time frame analysis to identify directional bias on any market. So the two questions are, number one, where have we come from? And number two, where are we going? So we can see where have we come from. We've taken out liquidity. Okay, we've taken out these highs. So once we take out liquidity or balance an inefficient market, then the market seeks the same on the opposing end. So we've been going down for quite some time, okay, and we've taken out this swing low. Now that's important because that swing low was the swing low that created these highs, right? Okay, so we've taken out a major swing low with this candle closure under there, okay, and in doing so, we have left this gap, which we've just recently come back up and balanced, okay, and so now that we have come down, we've taken out liquidity, okay, the market then seeks the same on the opposing end, which now we have done with this move up. And what have we done? We've rebalanced, right? We've now balanced a level of inefficiency, which was between that wick low and this wick high. So in there was the gap, and now we've come back today and balanced that region. So now the market needs to seek something of the same in the opposing end. That is either liquidity or some kind of inefficiency, which I don't see below, okay? We've already balanced this little gap here, okay? And in doing so, we've now moved up to do something on this side, which is there. We've balanced this entire gap. And so it is my view that we need to seek liquidity on the opposing end, which is down here or down here. So the first point of action would be to come down here and take out anyone that's already long from these levels. So that's where I think we are headed in the gold market. Now there is some level of what may seem to be inefficiency. However, this is slightly different in the sense that we do have buy side delivery and sell side delivery through that price range. And I don't think we need to go back up there in the interim, maybe later. But for now, I do believe that we've come up and balanced this price range, okay, with this gap that I mentioned from this down candle. And so the market now would like to most likely seek liquidity or a level of inefficiency on the opposing end, which is something down here. I don't see any inefficiency on this chart, and therefore on this chart we have liquidity that the market is most likely going to reach for next. Okay, so that's my view on this gold chart. Let's take a look at the weekly chart. Okay, now on the weekly chart we can also see some bearishness. We ask the same question: where have we come from? Where are we going? So where have we come from? We've taken out these highs with this move up here. So we've taken out liquidity, and therefore the market is now seeking something in the opposing end. Okay, and we have, after seeking these highs, the market has come down. Okay, and the market has taken out this low, right, that we can see with this down candle. The market has then come back up and balanced some of this down candle. Okay, but then again come back down and taken out liquidity. Once it's done that over here, it's come back down and taken out this liquidity, and then this green candle has moved up and taken out the high on this day. So you can see the market, every time it takes out liquidity or has some kind of a inefficiency that is coming to imbalance, it then does something on the opposing end, right? And so now that this most recent week that we are currently still in has taken out the high of last week, okay, then in my view, it needs to seek something on the opposing end. And so we'll either come back to the low of the current week or take out liquidity on this end, and maybe even as far as coming down to balance this level of inefficiency that has been remaining for quite some time, okay? But initially, I would simply target the lows of the current week, okay, in terms of where the market might be reaching for. Remember, this is a lesson on price action behavior, okay? So this, in my view, is now the next reach for the market, or down here, and only time will tell, okay? So your job now is to monitor the markets over the next couple of days or into the end of next week and see what has the market done, okay? Let's also have a quick look at the monthly chart, which in my view is going to be bullish, okay? So there's nothing here that's going to indicate to us any change in direction. We are bullish and still are bullish. Let's just measure where have we come into with this week's current price movement, or this month's price movement, we're on a monthly chart, compared to the last monthly wick. But again, if I ask myself where have we come from, well, we have in last month taken out the highs, okay? And so where are we going? In my view, this is the next level of inefficiency that on a monthly chart we would be reaching for, okay? And let's just also measure the range that we've come into on this last month wick. So I need to set I want to see just the 50%. And that is still a little bit higher, and that's okay. We don't have to get to 50%. In fact, if we don't get to 50% and we actually close this week and can start to move down, that would indicate that the market was not even able to reach 50% of this week on this monthly basis, and therefore would indicate weakness. But we don't know. We won't know until the end of the month, and this is a new month, June, so we won't know that for quite some time. So there is potential for the market to rise based on the monthly chart, given that we haven't reached this 50% of this week, which would bring us close to 2400, okay, 2388. So there's that potential that we could reach up to there. It's not far away, okay, 2388. So I want to keep that on the chart. So we could reach up to there before coming down to where we think we might be going based on my assessment in this video. Okay, so there's potential to rise, as I've said, to that level there. Okay, so we need to watch that, monitor that. But I do think that the market, I think, is going to be reaching for these lows or these lows, given the fact that we are bearish on this chart. But as I said, there definitely is a possibility that before we go down, we come up into this area. So that needs to be monitored. So your job is to now monitor that. Do we do that first? Do we head up into that zone and then come down? Or do we first go down wherever we're going to go down into and then come back up into that zone? Okay. So I hope this video has been useful. Monitor the charts over the next couple of weeks for your learning experience. And I will talk with you in a future video.